Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a short trade here off an area of very large, obvious resistance. And if you're not familiar with the zone between 2148 and 2151, you might want to jump on over to that newsletter because this is the level that we were talking about in the newsletter for resistance to come back. We had that big move down. Very likely it's going to come back. And at some point when it comes back between that area, you're going to find a lot of resistance there. Now, the first time it came back to that area, it did it earlier in the morning, actually afternoon, 8, 9, 10 o'clock at night, last night. Now, the reason I like selling here again at 2148 is mainly due to the fact that look what happened when it finally broke underneath it. When the sellers finally swarmed in, the buyers gave up, it happened at that level. Huge, obvious bear candle taking over the market sentiment, lots of bearishness, the buyers completely giving up. So if they come back to that area, I want to be a seller here again because I'm expecting them to defend their position. That's the entire objective of this. So I want to see the sellers come back in at this area and potentially drive the market right back down again. 2148 is the entry point. Now the stop on this one's going to be back towards the highs. So I'll put the stop right there and we'll go one tick above it. In terms of the objective, the target, what we're looking for here is for the market to want to drive back down again into where this big spike up came from. Now, initially that big spike started right here at 43.5. If we measure this up, we just need to make sure that it fits our risk reward, and it does. It's better than 1-to-1, which is a good thing. So we're going to look to take 2 off there. Now, the next thing that we want to look at is where did this big move start, right? All of this bullishness came in right here, arguably down here with that hold of the low a day. But when they push back up to the highs, the sellers got trapped and slam back in again. We have to assume that there are a lot of sellers that got screwed right there, right? They're going to hate everything about the fact that they may still be in this trade. So if it comes back to allow them to get out with minimal damage, they're going to take it. Now, we also have a small area of support and resistance at 39.75. So my final target is going to go right above that, assuming that if we come back anywhere near their earlier entry point, they're just going to say, you know what, get me out. I've been wrong this whole time. Thank you for giving me such a small stop, right? That's kind of what they're looking for at the moment. So the entry short at 48, first target at 43.5, second target at 40, ahead of that area down there with a stop up at 51.25. Sellers pushing down very nicely, and because we've taken such little risk on this, we're going to reduce it even further. It's obvious that the sellers wanted to defend this area very aggressively at 48, so knowing that information, we're able to get the stop down very nice and tight above that high. So the stop is going to go at 48.75, risking 3 ticks, and we're looking for the objective at 43.5. Now, the overall momentum to the downside that we're looking for here is, again, mainly to this point here at 43.5. We could find some support at the earlier moving average here. That wouldn't be a surprise at all to find some bouncing there, but the overall objective is to dig down into this area below here at 40. Again, you could front run it a little bit and go to 40.5, something along those lines, but that's about as far as I would go in terms of front run. So everything is still looking really nice. The risk is drastically reduced from what we've been seeing so far. Now we're looking for the first target at 43.5, hopefully just around the corner here with the sellers trying to take the market back over. Obviously respecting that 48 even area, and we're looking for a little bit more continuation of the downside to 40.5 next up. Sellers pushing down there, we get the target filled, nice little pop through the lows there. So now what we can do is reduce a stop to 1 contract, and because the stop is already so small and the first target was such a high risk reward, I'm just going to leave the stop where it is at 45.75. I don't want to see those highs broken, so as long as we stay below that, we'll be a-okay to the downside. So next target at 40.5. Seeing the sellers pushing down here, we're 1 tick away. So because we're 1 tick away, we tested the target. Now move the stop even tighter. There we go. Got the target filled. Beautiful move down. That's exactly what we were looking for. And this is the area that we're expecting the sellers to turn into buyers once again. Now, they may not be able to run this thing all the way back up to the highs. This is a pretty sturdy hold of a known area of resistance. But that being said, there are going to be a lot of sellers who maybe miss this opportunity up here. And if it comes back, they're going to jump all over it to try to make sure that they don't miss it again. So just a beautiful bounce off of that area that we talked about in the newsletter. Gorgeous rejection off of that. Sellers very obvious in their intention there. And that's going to do it for me. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.